Hey traders, hope you all having an awesome weekend. So an update here on nat gas, gold, silver and crude oil. So as always over the weekend I'm going to show you something to learn here as I try to give you as much as knowledge as possible through my weekend's video. But this week we did not get much movements due to Independence Day in US and Canada. That's why the market did not move much and we did not get many counter trades entry the zones I sent to the members. We did not get many opportunities there, but we had some nice pullback entries. These are the entries we use when the market is trending upwards or downwards. So I'm going to show you those entries which I've sent to the members as well, and I also want to show you how you can manage your trades and how you know when to exit the trades. So I'm going to give you little tips and tricks so that you can trade as efficient as possible. So this was a trade I've already shown in my previous weekend's video. I'm going to put the card up there if you want to see that. I've shown the live running trade right here. This was a trade. It is still running and I'm still managing this trade. Now, how do I know that I need to exit this trade? Now, I've already marked the zone above and this is the zone where I want to exit my trade if the price reach this zone. But what if the price did not hit the zone? Now, when the price is trending nicely upwards, the first thing, the way I managed my trades is through the ATR. That is a long chapter and that is what my students are learning in the MMTA course. But to give you a quick overview, when the market is trading nicely above both the EMAs, this red is my 50 EMA and the 20 EMA is right here in blue. I use 20 EMA as a trailing stop. I keep my stop loss below 20 EMA, few pips below, and keep on pushing the market up and keep on grabbing my profits until the price hit the zone above or until the price breaks and close below 20 EMA. Now at this point the trade is still running. Now the way I want to exit this trade, I'll see that if the price pushes back up and continue with the trend, or the way you can identify that the trend is now over, either the candlestick pattern which I'm going to show you in the next trade which I was managing and how I exit the trade. So wait for that. For now, I've already marked the zones like this. I want to show you the zone again. So right here, if you see, the price has created a little zone. So as long as price is making higher highs, we are still intact with a trend. Now at this point, price just made an equal high right here, a double top as well, but it is still intact with an uptrend unless and until the price breaks and close below this previous low and this little structure the price has created. Now when you're managing your trade, you need to make sure that price keep on making new higher highs, and once the price breaks below the previous low, it signals you that the price wants to change its trend. Now on Monday or Tuesday, if the price breaks and close below this little structure, I want to see a complete close. I will then quickly exit my trade and grab all the profits which I've made till right here. So that is how you can also manage your trade. Just identify the structures the price created with the pullbacks, and then if you're managing your trade, once that structure is broken, you can either exit your trade with that or use 20 EMA as your trailing stop, but the price is still intact. That is why I've just used this structure to manage my trade. Now another good example of Euro Japanese yen, I've shown this trade as well and I was managing this trade and I had the zone here. I've also shown this trade in my previous video, and at this point I knew we had a zone price is gonna hit and we had a double top pattern, enter the sell trade here as well. So I exit my trade once I saw this nice bearish engulfer. It's time to exit the trade, and then I waited to enter the next trade if I get a signal to enter. Now I know that price is still intact with a trend because it's still trading above 50 and 20 EMA after this pullback, and as you can see, this pullback was 72 pips. That was enough to hit your target, and then price start to push up. I was still waiting for a buy opportunity if I get a reason to enter. So I did not get any reason to enter. I did not enter any trade with a FOMO. But if you say this is a reason to enter, no, it's not. It invalidates one of my rules, so I still leave it as it is. Now once the price hit the zone above right here, we had a nice sell condition, and then what happens after a nice pullback right here, we had a nice bullish engulfer. This was a trade alert I've also sent to the members, as you can see on the screen. But I knew that price already has the zone above, which is a level of major resistance. The zone has been tested multiple times in the past. If you look back and see right here, that's why I had this zone above. Price has reacted out of this zone multiple times as a resistance and support both. That is why I just want to exit this trade after taking my profits. So I knew that my take profit is also aligning with the zone here. So I was good to go and I exit my trade right here, and right after that we had a candlestick pattern which I call an evening star. I know you have not heard me talking about this candlestick pattern a lot, but this is a strategy I'll be uploading for my MMTA course student how to trade evening star, morning stars pattern, so that they can add that strategy in their portfolio and get a better ROI by having some good strategy in their portfolio. So once I see this pattern, I knew that was a good sell signal. I entered my sell trade here, and then as you can see we had a nice fall of 159 pips till the level of trend continuation zone. So that is how you manage your trades. The first thing you need to identify these zones so that you know that how much you can manage your trades and when you can exit your trades. So I hope you got a little value out of this lesson. All I want to show you to grab profits as much as possible if the price is trending nicely. So a nice winning trade right here sent to the members. I've shown that pullback entry in an uptrend. Doesn't matter if the price is overbought, oversold, as once we see conditions, we are good to go long. Now I want to show you another trade that was a losing trade right here, and an example of not having your profit and stop loss both. It is a very good example here. This was a trade that I've sent to the members as well with a nice bullish engulfer. Price is nicely intact with the trend, forms this good bullish condition, and that doesn't mean the price is going to hit take profit every time we enter the trade. So that is why if the stop loss was not here, imagine how much loss you could have got just by leaving your price open without keeping your stop loss there. So very important to keep your stop loss and take profit both to avoid this all these stress by not having your stop loss there. So make sure you have there, even though your strategy is working fine. If you have good 2-3 winning trades, that doesn't mean you expose lots of risk in the next few trades and lose everything which you have made in the market. Right here, another trade alert I've sent to the member, a good example of not keeping your stop loss and take profit there. So right here the price hit a nice take profit of 73 pips. A nice example of price is trading nicely in a downtrend. So taking advantage of a nice downtrend with bearish engulfer, we entered this trade and we had a nice take profit hit. That is enough to hit our take profit. And if you see right here, this area was also a level that has been tested multiple times right here. That is why I always say that keep your stop loss and take profit, or if you are managing your trade, move your stop loss to break even, so that even if the price goes against your direction, you are out in break even, no profits, no loss. Right here, another good example of nice downtrend. Taking advantage of nice downtrend, we had a nice swing low bearish engulfer, entered this trade, and that hit my take profit. Not sure if it hits yours, depends on your broker. And as you can see with the spread, it hit my take profit. It was less than a pip. A very good example of a bearish trade. Now it is very important that you trade with a good broker that allows you to trade with a very tight spread. I trade with IC markets, switch markets. They both are really awesome with the spread. I've been trading with them from years, never had an issue. I use AvaTrade as well, and Ovanda of course for commodities. If you want to trade that, all the links are in the description. If you want to check that out, sign up using my link. I will add you in the priority group for free as well. So out of 4 trades I've sent, we had 3 good winning trades. I've personally entered one more trade, which is right here. Now I did not send this trade alert to the member because we already had a nice entry right here which I missed, but then I saw another entry with a valid condition right here, so I decided to enter it myself and take a risk, because once I saw a good condition and that hit my take profit, I do not enter a second trade quickly. But I chose to enter this trade myself, and that hit my take profit nicely. So that's it I want to show you. Hope you got a value out of it. If yes, hit a like button for me. If you are new, hit a subscribe button so that we can all trade together and trade efficiently. So let's start our analysis, starting with natural gas, gold, silver and crude oil. And what do we have right here? As you can see, the price nicely pushed down, pull back up. We had a good 2 red candles, and then we used the zone as a trend continuation zone. With that, we had a nice bearish conditions. Now let me show you what I've said in my last video so that you can understand the conditions and how to enter the trades using the zones. Or a hit of this zone followed by a red candle, a bearish engulfer. Once we have that, we are good to go. Shorts, all I want to see a signal to enter, which is my bearish signal within this area of value. And as you can see, the zone is 2.593, goes up to 2.653, from where I want to enter my sell trade. Awesome. So as you can see, after the break of this zone, we were waiting for the conditions like bearish engulfers, and we had a nice condition right here, although that was a weak signal. But looking at the fact, price was trading below 50 EMA and 20 EMA. With that, we had a pullback followed by bearish engulfer, and I have messages from few members that if it's a valid condition, I've already replied them that it is a valid condition. That is why I always say, if you spot a condition and if you're confused, you can DM me and check if it's a valid condition. I try to reply you as quick as possible. And with that, right here we had a condition. Area of this candle was 4.7 and price just pushed down 5.7. I've exited my trade right here as I do not hold commodities over the weekend, and I try to exit my trades once my take profit is hit, especially for commodities, and especially if the price is not trending nicely. If the price is trending nicely, then in that case I try to manage my trades. A good example of that is right here. Price is trending nicely, but in this case price just broke below 50 EMA. I decide to exit this trade. Now at this point we have a level of major support below the price. Now the support is bit far here on Ovanda, but price already hit the zone on capital.com, which I'm going to go through in a moment. So if you have missed this zone below, just mark these zones on your charts. It's 2.342, goes up to 2.436. Now all I want to see a hit of this zone followed by bullish engulfer or my double bottom entry confirmation. Pin bars is also one of my entry conditions. If you see a nice pin bar here, that is one of the entry condition. This nice swing low, bearish and bullish engulfers, that's one of my entry condition as well. So something like a bullish signal I want to see once the price hit this area of value. Now I also want to give you a heads up that price can possibly give you a pullback of few green candles and then forms another bearish engulfer. So keep an eye here. Do not get panic. I got lots of messages when the price was pushing up. The trader got scared that his price is going to reverse. I replied them that as long as price is trading below 50 and 20 EMA, we are only going to look for sell condition. We are not going to scare with the pullback. Anyway, if we have a pullback, doesn't mean that the price we're going to enter the buy trade just with the FOMO the price is going to push up. Wait for the conditions like this. So if we get a pullback of few green candles, 3 green candles, that's totally cool. If you have a hit of the zone again, that's totally fine, followed by bearish engulfer. If we have that, we are good to go short again. So if the price hit the zone below first in green, we're going to look for the buy conditions quickly. So wait for that. Wait for conditions only. Once we have a condition, only then enter your trades. Without that, you are just gambling. So price still has a room to hit the zone below, and I'm still expecting a price to push down and bearish for net gas. Now right here on capital.com, price has already pushed down and hit the zone below. So if I see a reason to enter within this whole area, I will still enter my buy trade. So this zone below is 2.478, goes up to 2.561. If we have a reason to enter like a bullish engulfer or double bottoms, we are good to go long again. Now if the price pushes back up, forms bearish conditions like a bearish engulfer, we are still good to go short till this zone and until we get a signal to enter another buy trade. Remember, if there is no signal here, price can still breaks below this zone as well. That is why very important to look for the conditions. A nice 382 candle, something like this. If we have a reason like this, I'm not expecting this candle to close above, form a bullish engulfer. In that case, I will not enter any buy trade. Let's see how the next candle opens. If the market opens gap up, gap below, we'll see the conditions according to that. So all I want to see a good reason to enter buy trade from this zone, or with the pullback of few green candles, if there is no conditions followed by bearish engulfer, we're only going to take sell trades unless and until I see a reason to enter within this area of value. So keep an eye for conditions, only enter once you spot a good entry. DM me if you're confused. Let's check silver. Right here, silver is pushing up again, breaks above and then breaks below it. It's keep on doing that from couple of weeks. Now we had a little anchor, little support, little resistance right here, if you see, which the price is struggling to break right here, if you see. So this is the only hurdle we have if you're looking for the next buy trade. So for now, we can still get a push up within the zone, get another bearish candle, and price can still fall. So I'm not entering any buy trades for now until the price breaks and close above this previous high. Once we have that, I'm only going to look for my buy condition till the price hit the zone above, which is 24.02, goes up to 24.60, from where I will enter my sell counter trade. Buy only above this area, or if we have a dramatic fall to the zone below, which is 22.12, goes up to 22.25, a zone from where I'm going to enter my buy trades. Again, for now, just look for sell condition. We can get a possible rejection here, a double top, and price can still fall from here. Buy only above this previous high. Right here on gold, exactly the same. As you can see, the little anchor has formed by the price. From these little pullbacks, it has formed the level of minor resistance. So at this point, exactly as silver, buy only up if we have a break above this anchor. Once we have that, we are good to go long till the zone above. For now, I'm just waiting. I'm still bearish for gold, not entering buy trades as long as I see a good condition to enter buy trades. The next zone to enter your buy trade, if you have a dramatic fall, it is right below. Adjusted the zone again. It's 1873.11 goes up to 1891.35, a zone from where we can enter another long trade. So have these zones, look for the conditions, enter your trade once we have a good reason to enter. Last one, we have crude oil. Has pushed up nicely and pushing up nicely above 50 EMA. As mentioned in my yesterday's video, price is now in the minor resistance. So wait and see how next candle opens. If we have a next candle that close as a bearish engulfer, we have a very good sell signal. If you have a push down, pull back, double top, we have a still good signal. So wait for the next candle. If closed above this zone, then we are only going to take long until the price hit the zone above 76.60, goes up to 78.91, a zone we've been waiting from last couple of weeks. And once the price hit this zone, I will enter my sell counter trade with bearish engulfers, double top entry confirmation. For now, if you have a pullback followed by bullish engulfer, only then I'm going to enter my buy trades only. Again, don't get confused. If we have no sell signal here, we just see a pullback followed by bullish engulfer, I will still go long and keep on taking longs until the price hit the zone above right in red. So that's it for commodities, guys. Hope you got a value out of the videos, and if you have made it to the end, you are a legend. Do not forget to hit a like button for me. It really helps me in the YouTube algorithm. Hope you trade green next week as well. See you guys in the next video. Have an awesome weekend. Take care.